It's a very thin book though. This could quite easily overshoot where you think it's going to hold. So I'm just looking at 40 in the ES. $42. See straight through. It's very, because it's so thin, I could have taken a loss there. I could have just been bundled out. That went -3 ticks on the 40. So you can see it's just so thrashing about the place. You have to, your risk goes up. You can't really say, well, I'm down a couple of ticks, this doesn't look right. It's you can't have that mentality. You've sort of got to stand back a fair way. But doing that, you can see how you can lose a lot more on a thin book than what you really want to. We're trading above 40 now. Just push it through the levels. There's a bit of manipulation there. It's quite easy to move the prices around. This is back to settlement and Globex open, this 43.25. You've got around the 42. That's pretty low risk short anyway at 42. It's that big bulk floor that they've dropped it out. It's quite choppy contextually. If you look on the 60-minute, just throwing around the place in a very tight little area. Okay, just a bit of flows. ECB's Draghi says it's hard to give a figure for the purchase program. Euro has seen some moderate strength during the opening statement from the ECB's Draghi. Attention paid to the fact that ECB continue to see inflation subdued overall with the ABS plan over 2 years rather than 1 year, lessening the need for immediate. These latest comments may suggest the ECB is happy to sit out the current plans rather than go into a full-blown QE. We have to remember too, this euro currency is doing the job for the ECB. That euro is 140, and now it's trading 126. So the more that softens, the better it is for them, and the ECB don't have to do much at all. Just need that currency to keep on weakening, and it's going to help them out a mile. So instead of, if that currency keeps dropping like it is, they won't need to go to QE. It says there that there has been some concern over the low inflation in the Eurozone, particularly given the recent low reading in the core EZ CPIs, but Draghi has played down any fears of deflationary spiral. So we're now into the Q&A, guys. It says there, and it's often the case, things can change very quickly as we remain vigilant. Also know that Draghi has already said the details of the ABS-CBS plan will be released on the Equities cash open. Washington Post reports that streets near the White House closed due to suspicious vehicle. Probably some cable man having lunch. Still thin book in the ES, very thin. Same with the Treasuries, haven't really recovered that much. Euro 26.48. That and the yen are just thrashing around. They're not doing anything. So it's very hard to even lean on that when you're trading the Treasuries. It's just no pattern to trade. It's not like it's moving in one direction and there's any set bid or offer prices. They're just ripping it around the place. So it's very hard to use those ones to lean on for a Treasuries trade. Obviously, we've got the ES ticking back out with the tenors under a little bit of pressure. Dollar not really giving us any help at all at the moment. ES trades at settlement 43.25. They're trying to work the back of 40 here, 21.94. Just not worth the trade at this stage. It's too thin. It's unfortunate, but it's actually very thin, ridiculously thin. You can't do anything about it. You just have to wait till it normalizes. It's just one of those things. You can participate for sure, but you're going to have extra risk, that's all. But I wouldn't recommend it. We'll duck across to the Euro screen and you'll be able to see what happens when the CBs get on. See this? This is not normal. That's doubles. Should be, 200s and things like that, 3s and 4s even at some levels. And what that creates is a crude type trade, a DAX type trade. That's why it's very rough to even, and it's not pattern trade. There's no pattern to that. That's randomness, complete and utter randomness. Your risk just goes straight out the roof here in this type of stuff. It's not even useful. But it's quite good. You can use the tool straight away to say whether the trade's going to be decent enough or not for you. But you should be prepared well in advance. Whenever the CBs get on, you'll know what happens. No one else wants to participate. There's only a few guys in this. The yen a little bit more stable in trade, but you can see that the euros, that's the CB that's on, so it's being, it's the one that's mostly affected. You got 26.80 in that euro. You're going to have stops out above here for sure. Stops. from guys swinging down. Anyone selling in these ones, they'll put their stops out here. So it's one of those things that could punch out here and then come back down. Stops. Be interesting to see if the book rolls up into there, what type of numbers sit up in here into that pocket. See if you get the 4s or 500s up there. Yes, just dropped through 40. Tenors hold that 14, but really doing nothing at the moment, the 10-year. The ES can't make up its mind which way it really wants to go either, so there's not really a trade here. Book slowly coming back, slowly. Tenors looking better than the ES. There's 600 there, it's 75. Big number. The way this is trading, feels like it wants to hit that 7.5. It won't give it up. Traded. There's a few bigger numbers out here, 82 and 84. A couple of hundred up there just sitting there. If you ever see that like that, this thing's pushing and you see a massive number like 600 and you see the order flow really dog at a bone, don't short it. Even if you think it's at a high or something like this, a resistance, don't do it. They're out for something. They're going to keep going until they hit it. It's just their way of getting paid. Otherwise, I'll eat cheese if they can't get it there, but if they're big enough, they'll just keep push until they hit what they need. They're looking at those prices. Just buzz across back to the other screen. It was only up until not long ago that the CME published the extra 5 in the book back. They only gave you 5. They still give you 5 in the yen futures and the pound and the Aussie, but they're now giving you 10 back in the euro, which is quite interesting. So the CME have updated that book to give you 10 back. Was never done with the currency, the FX futures. It was only 5s. You see it's quite choppy. There's no pattern to trade here. It's also got a bit of that random element to it. Same as the ES and the euro. Euro did push out. The yen's pushing out too, so it's going to be helping this Treasury just off that 14 floor. The ES is mixed. We've got mixed equities. But I couldn't say whether I'm biased to one side or the other. It's washed. We have really washed over trade. It's hard to pick up on what side you should be working. And things change instantly with the Q&A and a central banker on, so it's not a good lean anywhere. In terms of this trade here, it's 16 halves are just the best sell and 14s are the best buy, and you're offloading in the center there somewhere. It's just there's nothing here. Still the books that you can see the 2027. It's usually well over 3, up to 4s and 5s, 6s and 7s occasionally in the book. In the 10-year, the ES is just, yeah, well, it's not even really half size. This thing's a bit sick at the moment, the liquidity in the ES. I don't know what's wrong with it. It's dodge. Makes it hard to trade sometimes too. Yen's on the bid. Equities are a little bit heavy, the ES, and the 10ers are sort of prop 2 with the euro holding, yen holding. What I'm kind of doing at the moment is searching for trade a little bit. It's you just got to be patient with some of this stuff. 39 halves. $56, 58s. Stripping back again. Just looking at 39.5 in the ES as a sale. 39.5 with a 40 lean. Line in the sand. Should be taking no more than sort of 4 ticks. Get it back up there. Still generally offering the US dollar, helping the 10s higher. ES struggling. Double bottom there above the 3.7. 3.7 quarter is the floor. Just looking at this here, 42. So you can see 42. I'm looking at what if I get short at 39.5, flowing with this bit of sentiment. If I get short, then I'm getting short. You can see the spike highs. It keeps pushing up, double bottom pushing up, 39.5. You can see it's kind of a pivoted price there. But if you look on the P&F, you see how we got a bid 39.5, and then they bid it again, and then they dropped it through. So it's a key level, but that 40 quarters, so you got a fair bit to lean on at 39.5 all the way to 40 half. If it gets to 40 half and you don't get any response, you need to organise it out, that short 39 half. Anyway, we're just looking at this, see what happens. Still offering the dollar. Yen 92.14, euro 26.74. Treasuries trade the top of profile on a weak dollar. ES won't get to where we want it to. Stupid thing. Got pretty much a very wide range in the 10s there now. We've got 13.5, 17s, 33, 32, skew fairly even. Book not completely back to normal. Euro and yen maintaining a bid. Treasuries are bidding the ceiling. See if they can push it out. Equity's still weak. Euro ticking back a little bit. Just maintaining a bid here, the 10-year. And the dollar mainly offered. She's struggling. Someone's over at 17, they're trying to hit it back down. Got a weak ES, this is pushing. If this dumps through, that pops out, guarantee it. They're just holding this 3.7. Euro and yen maintain the bid. Trading 17s in the 10s, really pushing the top here. The ES just hanging on to the bottom. Looks like it's gone. Ticked on through. Have a look at this. Need a decent push out to confirm long side. One tick isn't going to do it. Couldn't quite get to up to 39.5. Didn't even do a 39, the silly thing. So you can see even reading that, you see what you're doing a little bit. If you're trading the tenors, you should be looking at the ES. You should have this and say 37, wow, this looks pretty soft. If they dump that, they could push the top of here. So this might not be a good sell this time around with the euro and yen bid. It's not a good sale at 17, 16 and a half on the tenors. You can see that with the ES pushing the floor. If you're a Treasury trader. $34s, 27s, 37s in the ES. What do we got? Holds. Just looking. $33.75. Amazing low. 64.85 skews downside. 37 quarters. 38. 37 quarter to 38 quarter. It's okay. 37 quarters. Just see. We got 38 quarter, 18. 38 is a ledge there. Plenty of sellers coming over, destroying the bid. Get one of those days it won't come up. It won't sort of trade back up. You do it on these ones, but uh, 17 in the 10s. You've got 16.5 settlements to lean on. 16.5, 17s and 16s. You're just trying to work out your risk all the time. That's what you're doing. You're saying, well, I've ticked over alongside. They've really destroyed a lot of those levels. Yeah, so you're not going to get any offer into even here. I'm not even being greedy. Just won't even tick up anything. It's a chaser job. Same with the treasuries. Take these type of markets. I mean, on the ticks through 17, sure, you can chase a breakout, but sometimes that can you can eat cheese on those ones. You're better off confirming it's a break and then trying to get in, but then you struggle with that problem of getting on that side, on that long side. That's what you then struggle with. I'll put a few orders in. Let's see. 15 minutes, we've got the equities open. 15 minutes out of the equities open, we've got the ISMs, and the factory orders are half an hour out of that cash equities open. Anyway, we'll just have a look at 17s. I've got settlements and 16s. It's quite thick there. We'll see what happens. See if I can get a tick back. It's all you can do. You can't really. You've got to have a plan. You trade the plan. You take it, and then you, like I said, 17s long, 16s are my risk. I kind of want that 16, this to hold in here on the tick backs. And that's all you can do. You can buy it now at 19, but if it ticks back, comes back to 17.5, well, what are you going to do about that? Where's your line in the sand? You've got to work out where the downside is. You've got to work out your uncle point or where you're going to have enough. And then you say to yourself, well, long 17, I need 16, 15.5 to hold, and I can live with that. That's fine. You shouldn't just trade hope with your eyes closed and hope it works. You've got to work out that point. You've got to be a little bit realistic too. Sometimes it's hard in these markets. Like this could just push out from here and go up to here. They just never let you in. But you still have to measure your risk properly. You it only really starts trading 36s here. So 35 3/4, 71. It may get the offer 35 3/4, 1644 there on the hold. And it sort of that's where it starts to go two-way trading. It was all selling to here, so knocking the stops out. And then it starts to trade a little bit that. Draghi says potential universe of covered bonds and ABS program is up to euro 1 trillion. Fine. Skew topside in the 10s. Peripheral yields continue to rise with the 10-year spread over the German benchmark bonds continue to widen as longer than anticipated. ABS program reduces the need for imminent QE. Soft euro too. That'll help. So we're in long here at 17s. We've got the yen ticking back, euro ticking back. We want those to kind of stay bid, and we don't want this ES really pumping up higher either, 1400. I'm kind of just, there's plenty of sellers and not much buyers here, so just monitoring that. ES is on the bid. It's not going to help this long treasury off 17. Plenty of sellers, no buyers. Just keeping an eye on things. 33, 34 top side, ES ticking back. Yen still ticking back, 92.18. Euro ticking back, 26.83s. Need the euro and the yen to pick up a bit. They're not trading 16.5s yet. Now they start to. 34, still skew top side, various big numbers. pick up 17. Very decisive point is 17. Euro still falling back, yen still falling back. They pick up 17s again. Might be right, might be wrong, but it's I'm on struggle street here. There's a big seller on top. Fours, 157 to 16.5 settlement. Yens and euros trying to hold. The ES is just pushing out. Just flatten that one off, 33058. Now it'll go. Yen and euro picking the bid up again, so no, a bit of a shame, scratched out. There's just some selling there. Someone's trying to hit this back down. But I'm well aware contextually we're coming down off these highs. So I'm just being a little bit careful. We're making lower lows. We're on the we're tilting down on this 60 minutes. Just being a little bit careful with that 17. Obviously it's paying me now, but I'm not in it. It's frustrating. You can see a little bit there, just with the order flow on the inside. You can get shaken out a little bit. It's a bit like buying a property. The location is the most important thing. If you're very good at picking location, most of the time, what happens on this inside is it's not so important. It's your skill in picking the location to trade is that's just very important. And you can see on that one, you can get bumped early on the back of that 17. I only took a tick heat and it's traded 18.5. So a 17. And that was just because it was sort of popping back and through there. They weren't really hitting 16.5 so much, which was settlement and VPOC. But there were some bigger guys coming over just around here really hitting that. So it was... you can get them where they just give it up and it slides back inside. So I didn't want to take any chances. But you can see on this, it's more about your location. If you can pick up the right side of trade and locate then that lowest risk price, that's the main thing. You can get bumped around on this trading the inside a little bit. That's why guys that just trade off this, you can really struggle with it. There's a skill in picking the right side of trade and then just hitting that right number on the right side of trade, the lowest risk. This can give you a bumpy ride. So don't freak out too much about this inside. So we're back to 17s, very briefly at the top there. Still very thin book in the euro. It's just double digits. You've got the cash open 6 minutes for this ES. We'll see if this book thickens up. There are some guys that will actually take that centerpiece. They'll take those two columns away. They'll just have the depth and the stacking and then the profile and just play it basic like that and just play that level. Long as they're on top or roundabouts and they hold that area, then they're okay. Obviously, at times it can help you out, but like I said, it can be a bumpy ride sometimes. It can knock you out of something that's good. You get too close. You can get too close to something. That fine, minute tick, 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 tick. It's not that you take it with a grain of salt, because you can get some really big movement and pick up definitely, like as an example, say I went long 17 and then someone came and moved 5,000 at 16 and a half and then they cap this side. You might be in trouble. So it's good in that aspect, but in general trade, you can see it just kind of pops around a little bit. Got the ES trading off the bottom at the moment, 3 minutes to the equity cash open. Very tight little choppy range in the ES. But there's not much. I mean, I'm back to 17 again, and that didn't go very far. They're holding 18 and a half down. So there's a bit of selling up here, which why I was a little bit worried to come back pretty quick to 17, 16 and a half. It took that thing out, and there was some hitters in here. And because of these highs coming down and sort of it's almost breaking new lows, it's a little bit of a worry. You've got to be careful they don't keep on the slide and then really drop it down. But you're trading sort of defense. Don't run in there, try and make a million. You're trying to be sensible, take low risk stuff and trade defense. Otherwise, if you get in there and you go bull at a gate, you can have really, really, really bad days. I'll just put these markers on so people know what I've done. That was a big dirty scratch, that one. As we go along, I just mark it. It makes it easy to remember. Sometimes I still prefer to stay long side though. Needs to really crack that 17. Pretty funky though. You can see the dump down and then the bid straight back out through. Not very good for selling. The only thing is they are trying to just bring it down slightly contextually on that bigger time frame, but this seems more, it's on the bid than anything else. Just bidding equities as well at the moment. Yen and euro chopping around the place. Gary, trade. Yeah, it isn't. It's never the best thing, but what it was in this trade, it was that break at 17. So you can see they were really offering that, and then they took it well out. And I'm trying to trade discount. It's actually, in terms of this, it's the lowest risk long you can have, because if it gets under that offered price of 17 and cuts back inside, then what they can do, you sometimes see them that, and this is why it's important to locate. Now you see them offer, and then they're trying here to hold it. You see them, that block, they're trying to hold it, and then it breaks through, goes here and ticks back, and they take it bid. So as long as it holds that, it just so happened to be that VPOC is one below you, which is also settlement. But 17 was the back of the break. And as long as that area roughly holds, it's okay. But in general terms, yeah, if we look at trading this aspect, say as an example, we had this. In the same scenario as this, and this was VPOC, and I was trying to deal in here, that's a little bit different. You see how this is a fresh changeover, it's not a range. But say we had a range top bottom like this, and I was doing VPOC through the center, and I was trying to trade a long out there. No, that's bad idea. It's only the fact that these guys have been taking it short, and then suddenly they take it up, and then they blow it out long sides. So from this point here on, it leaves it on top 17 long. But we're not in a range on this thing, really. You can say contextually we are, but in terms of trade, so I'm kind of comparing the auction also with what's happening on the bid and the offer a little bit. But you see how it's never really gone too far. I'm a little bit worried about this business, just trading off the highs. I'm just taking a very rounded approach. I'm looking contextually, what could be my problems with this trade, all of those things. It's pretty nauncy. See how they won't do much at 16.5 settlement, 28 tap, and then bang. Someone picks 17 up. They're on the long side. They just showed you what side they're on, as long as that 17 holds, because there's no big hitters going 16.5s. They do rubbish there. See how it goes, this. You watch this, ready? It's 16.5 settlement, 14s. They strip it back. They show them that level. Anyone want to hit it? Anyone gain? Anyone gain? There's just no one gain. They're capping it here, but there's plenty of buyers trying to shift 17. 99 on a strip, 16.5. Equities on a bid, they won't dump the 10s. This thing's bidding, they won't hit 16.5. Now they tap it. They're dropping the euro and the yen, but the 10s won't dump 16.5. They won't go it. Now they trade it. Now they start to trade it. Euro dumping, yen dumping. No sellers at 16.5. They're actually trying to bid. They're trying to buy 17. ES still bidding out. Weak selling into 16.5 settlement. Skew top side. Now they start to trade it with a little bit more. Now we've gotten a little bit washed over. Gary, if you see that, we're kind of broke out and now we're back inside looking a little bit weak. So you have to kind of, now trying to play VPOC, it's a little bit in doubt. You see the break there, you should have a bid and then continuation and a hold and push back out if it's straight and true. But this thing, they were holding 18.5 and then they go and push it through that 17, trade 16, 16.5. It's a little bit worrying, but now it's kind of got washed over. At VPOC there, it's a tough trade. ES is funny enough there as well. Still a fairly thin-ish book. You see only triple digits in that ES. So my mentality now with this Treasuries is they're bidding that ES out. Still a terrible trade, very tight range, just chopping and chewing. That it's kind of gone that short side. They couldn't hold that 17 properly, and it actually looked like someone's holding 17 down. So my mentality towards this trade is if that's an offer and they crack it and they bid it and they bid it and they fail, then on the way back I might be able to get a cheeky sell and then be able to manage something off. If this wants to continue the slide, you see how you're kind of there but not. You get guys who are just quick on it and they'll tap, tap. It's not going down much. But that's the mentality. You're sort of seeing if one side can't do it and it fails, then you've got to run with the other side. And it's trying to get that price with the lowest risk that if it does tick through you a little bit, you're still into a whole block of selling. They'd have to go and destroy all that to prove you're wrong. And short 17s, you can lean on 18s at 20,000. You've got the edge of profile 18.5. There's just a couple of 3 ticks out there, 2-3 ticks, and you might even get the tick back and think, you know what, this has gone range again. I'm not going to. I'll scratch the 17 off. Also, like I said, it's sort of softening down, and this thing is really bidded out. Double tap bottoms, tight range. I'm applying really the same principle I would on this side. Once it breaks down, you're trying to get cheeky shorts up into here because you can manage that off. I'm applying the same principle, just getting that break price 17, which they're flipping. And then on the way back up, I try and hit somewhere up into there. Sometimes you don't get a fill. Sometimes it comes up and trades that price, and then it'll start to fill it and someone will come over at 16.5 and do 2,000, then it'll go straight back down again, but you'll know it's on the slide. So this is not good. It's releasing some longs on top 17.5. causing downward pressure. You had the slide in the yen and the euro. The yen and the euro aren't doing so well, so you've got a big US dollar, yields up, tenors struggling, and the ES also pushing out on the bid. So then I start working in the 10s, I start working 17s. Does that make sense to you guys? If you're in the webinar, just use the webinar chat. I haven't got Blazer up, but just a quick, does what I'm saying make sense? Or there's no, like I said, there's no set rule. I'm using discretion, and I'm trying to read trade as it goes along, the buyers and the sellers, and who's doing what, and what they're going to think of things if that number, a certain number, doesn't hold. I mean, it's like anything. If you see, well, you say resistance, but if you see a price like 17 that's offered and they go through it by a fair few ticks and they come back, well, so you bid the back of that. But in the back of your mind, you're thinking, I really would like that sort of 17 or 16.5 settlement to hold for me. That's a line in the sand. If they run that through with some size, I don't want to be around anymore, because you just get more and more risk. So, and then you're looking at other things like the option and the fact that it's VPOC. So it's pretty naughty, and it's every circuit you got to sort of weigh up. It's not every circumstance with regards trading this bid and offer and the structure, and then the actual option of VPOC. It can be slightly different. Like I said, this wasn't range trade where something like this is going sideways and VPOC could be in the middle, and you're trying to take a long at VPOC in a range. It's a little bit different to something that's had a massive impulsive leg out the highs, and then you're trying to catch the move back out from VPOC to push. VPOC's always a little bit of a bumpy ride. You see how back and forward it was for me at 17. There were some hitters trying to take 17 down, not too many hitting 16.5 VPOC settlement. But you can see how bumpy the ride was until they sorted it out. And then once they did, it popped out 2-3 ticks, and they were holding and offering that eventually. But it's always bumpy at VPOC. It's a rough ride in that ES. It sort of goes back and forward, back and forward. That's why it's very tough to trade. See, at the moment in the ES, if you take this, Gary, you're right in the middle. You got VPOC at that, around that 40, half, 43/4. There's no direction. It's nothing. So taking a trade now, it's a bit hocus pocus. You want to trade away from that thing. See, they're just dumping this down. I was actually afraid that they would do this on this time, that they would give it up. The way they were hitting 17 and wouldn't let it up properly, I actually feared this type of thing here. And I was very worried contextually as it come off the highs on this 10s. That's why after a while I thought, you know what, it's not good. It eventually paid me a little bit. But this was my fear, but you get longs in here. They're now having to slide out, and then you get some shorts on top. It creates a bit of extra push down. Joe, very good. Gary, okay. Tim, thanks. Dale, okay. Pete, no worries. Yeah, I got too many chat boxes up. It's just to confirm that if there's any questions as I go along. I guess what helps is visualizing trade. What I mean by that is, I'll just clear those drawings. I'm visualizing that the sellers, while under 17, are okay. They're fine. They're happy anywhere in here. As soon as it gets out above, they're not going to be that happy with that. not on this impulsive leg like that. They're just not going to be happy that it's crested 17 and pushed out. You're going to get some liquidation on the back of that, and you've got other guys thinking this could switch it over. And you see the mentality, they're the same as what I had, although it's settlement and VPOP's just one tick under you. You get guys bidding the back. They're a little bit afraid that, oh, if I'm short here, I need to cancel this off. We could trade up here in half an hour, and I don't want to be short in here. If we're going to go up to here, I'd rather take a couple of ticks down than be having the risk of sitting up here short here. And then as it trades on top, I'm thinking, okay, there's longs up here, right? So we're on top of 17 for sure, but I can see that the sellers are holding down. Your brain has got to think both ways of the market. You've got to think long, short, long, short. It's not about taking a bias. It's about saying, well, the longs are in control. They've taken 17. My best shot is getting bid 17, trying to work top side. But don't ever forget who's going to be on top of you going to ruin your day. So you can see them, they're offering that price, but it's doing a small range. So suddenly my brain says, okay, we're on top of 17, but they're holding that 18 down, and I'm trying to get further prices out, but they won't let me up. So it'd be a good time in this case to say, well, you know what, I'll take some off and I'll put stop to break even. Because if they do let the 17 go, the longs in here, like the shorts in here, won't like it. They will try and work something out. ES dumping back down now, just helping the tenors go back out, sitting 16, sitting up at 17. Just making sure I'm not being too scroogey on this. Wait a second. Pretty funky trade. They're not quite sure. You see they push it up, they dump, they push it, they dump, they slide it, they dump, then they push it up, they try and trade the long, then they dump, then they push it up. So it's pretty funky type trade at the moment in the tens. See what happens. It might not get to 17s. It might get to 17s. But 17s is the lowest risk price. So don't forget these ones. Factory orders, negative 9.5. 12 minutes. Not going to let us up, are they? Another thing you should do, and it does make a huge difference, be very quick about what I mean by that is, yeah, how do I say this? If you feel like it's ticking down and it's changed and it goes ticking down, the quicker you can get that limit in, you get yourself queued out ahead. You won't have to sit back there and at 3,445 back in the queue. You might be halfway or 1,000. So the quicker you can work out, oh, that's a fail and it's starting to drop down. If I want to trade, I can go to market, or if I want that number later on, the quicker you can get it in there. And that's why it's, if you're tracking the market, say on the breakout up here, the quicker you can get to that 17, well, you line yourself up a lot quicker. Because the trouble you can have sometimes, not in this case, it was okay, it was quite poppy, but it may come into that level and only do 500 out of 3,000 and then go straight back up. So the quicker you can get yourself limited on that price on the way out, the better. Because on the way back in, you'll be queued up quite close, and you'll find in the tenors it can be a problem. You can sit there, see these guys, it taps 16 and trades 3 on the limit. Up here, see these taps and these taps, but the quicker you realize, okay, this could be a price, I need to get myself queued, especially in thicker markets like the 10s. It's just something to think about, but it'll help if you have your numbers well in advance already penned in, so you're ready to go, and if it breaks out, bang, you click that break number as it goes out to line yourself up. Nine minutes till this news. I'll just sit back at that 17 still. And this is why kind of, if you use context, you'll see that there's a bit of an issue with this thing. It's coming off. It can't really break new highs. So any longs at 17, you're just on the edge of your seat. You're really just hawking that a little bit. It didn't give you a lot on this occasion. It's breaking down. It's just pure selling you. So you're having one of those days where it's selling off 14, 15 and a half, 19, 16s. Big skew underneath 10,000, 13s. Don't want to get too close. 15s are probably a little bit better. I stand back. I've got this news. I'll go to 15 and live with 15. If they're tapping 16s, it's a couple of ticks. So if we have a little look at why we're doing this short side, it's very easy to say, well, okay, why are you going short? Why aren't you going long out from the bottom of here? You can see that the equities are generally on the bid. You've got 37 there. They're breaking 41. This has been an issue. And then you've got sort of the euro and the yen. They're just looking a little bit soft at the moment. So 17 doesn't hold. Context highs are coming down, breaking the lows, not so crash hot. Just trading this back. You may have a lot of guys who are still in longs from all of this, and as it starts to come back, you might get that heavier slide as it picks up momentum. I think Dale said that yesterday, or someone did. That usually if you get a day up like this, you can trade back a little bit because it's that offloading, that liquidation as everyone sort of hits the door at the same time, and you get a heavy slide. Six minutes till this news. 15.5 is probably the lowest risk, but it's just one of those things. Sometimes you don't get a fill on the thing, and see what somebody's doing. They come across, it barely does, limits it here, and they just pound this one, and then the slide continues without you on it. It's that balance of trying to manage your risk without being too stingy. Is a fine line sometimes when you're chasing ticks intraday, to get that right, to get yourself on board realistically, not be daydreaming about trying to get on a price that's just never going to get there. So like I said, this thing's trading down. It's broke 17. They're holding as they come down 16s through settlement, through VPOP. It's running a direction. Euro yen still a little bit, just trading back, but sort of stopped at the moment from their slides, the yen and the euro. The ES is just a mess, that thing at the moment. 56, 4 minutes till this news. You can see where these big guys, their mentality, and you think about, and this is what I say, if you look at the book 41 and 45, what they're trying to do, they're doing the same thing. They're trying to get the lowest risk prices, 41 and 45, so they're running short of that V-pocket settlement. They've already picked up on that this market is weak. So any moves up into here are low risk prices. You see where they see in here 55s. If you remember yesterday, and this is the beauty of trading the one instrument, yesterday that was that huge hold. So we're short there. Need this to bump back down a bit. No sellers here though. No, they pick it up. 15 halves trade. There's no sellers. Yen, euro, just staying there for the time being. Need this to slide back down. Someone hits 15. 14's the edge. Just see if we get the slide back. I've got the news, which is a pain in the ass, 3 minutes. Trading 14 halves, 857. Strip 14s. Capping this side. No one buying at the moment. Picks up 14 and a halves. Equities hold. Yen's on a little bit of a bid, and same with the euro. Skew underneath us still. Trading 15s. They're propping 14 and a halves in the 10s. See the size here, some buyers here. I might not get my 14s. Holding 22s at 15s. Hold. No big hitters as yet. 359. Very thin book. stripping the book. No one's selling 15s, now they clear it, picking 15s up. Thought we might have got a bump down before the news. Knocking the ES down. Factory orders is negative 10.1. They expected a negative 9.5. It's worse than expected. A little bit in the tenors. Dropping the ES out. Bidding euro and yen. Just pushing this 10 out. They hold 16s at the moment. VPOC and settlement 16.5s with really that hold down. Bit of a tough day. Kind of dancing around a lot of, you see on a day like this, you got a strip back book, you're trying to dance around the European CB, you've got announcements sort of every half an hour, not big announcements, it's not like very high impact announcements, just normal ones, but enough to bump you around a few ticks or bump you out, and it can be a little bit of a frustrating type day. They're just holding, this 14 is just a big number, so you're kind of selling into a big base. You want to give yourself room, especially if you see it so solid underneath you like this. 14.5 is a bit of a problem for the seller. Big skew underneath. The ES is just ratty trade today. This is ratty. You'd be struggling on this thing a little bit. The tenors are reasonably good and clean to trade. You can sort of track trade fairly well. This is randomness here and plenty of tick risk. You could sell at 41 and blow you through. Yeah, it's just very spiky and over and undershooting. But all you can do is you keep doing this day in and day out. You just try and trade feedback. Just keep it there. If you can do this day in and day out, just try and keep. I know a lot of guys. There are guys that I know that have just had a terrible time and they've done their accounts. So your job is to really do the best you can at maintaining your composure and discipline and taking low risk trades and just trying to trade a process. You can, like I said, I got it 15 short and they're trading 14.5s and I could be +1 instead of a scratch. You can look at all of those things, but the thing at the end of the day is that whatever you do, you did it with discipline. If you can walk away and say, okay, I lost 3 ticks or I lost 10 ticks, I did everything. Well, I did everything the best I could. I knocked out when I should. I didn't do any crazy stuff. I took my setups. That's all you can do. So hold your head high, even if you come out with scratching or you're down some ticks. You can't measure success over sort of 2 months trade. I mean, you look at Bill Gross, Bond King. He didn't become the Bond King over 2 months. He became that over years and years and years. So don't measure yourself just on a day's trade or 2 weeks of trading. You've got to measure yourself over time. But just keep working the market like this. Be sensible, manage your risk, trade feedback. And if you do that and you're disciplined, well, you can hold your head high even if you struggle a little bit and you're not making the ticks. It'll come to you, but if you don't have an account anymore because you're blowing it from being undisciplined or doing silly things, then yeah, you'll never get to grow into a decent trader. You're not getting any help today from the ES. He's a dog. The euro's dropping. They're dropping the euro. They're holding the yen at 92.09, but they're dumping the euro down, trading 26.44 at the moment. They did run the 26.80, so stops got done on that. And his guys on the swinging that euro with mark stops at 26.80. They've been taken out of trade right now, and it's trading back down. You can see how well manipulated. Is it manipulated? It's just they're trying to facilitate trade, these big guys. That's all they do. They have a lot of contracts to trade, and they'll use the back of stops and liquidity to do what they need to do. It's not sure if I want a 17 on this way back up or not. You're taking out 36 is dumping the ES, bidding yen. Not sure if it's wise. 16.5 settlements, 18s, 17s. It's real messy today. Really messy trade. Even in the 10s a little bit, you see an impulsive out, hold on the 17, try to push through, and then they bust down, so impulsive short. And then you can see they're trying to work the short side now, but that's not really paying out very well either. So we're getting very messy type trade. It's not easy to get the ticks. You're trying to get stuff in between, and then you've got to battle the fills, the news, the speakers, the options. You're dancing around everything. If you wanted to sell this year, you'd have to, I'm not sure you're going to get anything at 16s. They're caps, 15.5s, but you've got 14.5s. There's a couple of ticks there. You can see in this, they're not really trading 14s. They are trading 14.5s. So they trade 14.5s, but you see 14s, the size is a little bit off. Skew downside. And they pick it back up again. They won't touch 14, so they're not trading 14s at this stage. So you've got a tight little market there. Tapping 16s, trading 15s, trading 14.5, 15 halves, 14.5s. These are two ticks. Short 15.5, out 14.5. Or if you're looking for longer term, but it looks like we've got a directionless market actually. The yen is just chopping, the ES is chopping, the tenors don't know, the euro's dropping out, euros on the stretch, but everything else just starts doing 14 a little bit now. Yeah, this is bottom. Prefer to work the short side actually, just with this, you break out and a fail. You see the longs fail on 17 and then you work under with the highs tapping off. The short side's a better trade, so going long off this bottom 14, 14.5 is not A grade. The better side to be on is that short side. Rallying ES certainly going to help this. This can keep pushing out off this mess, but this is anyone trading that ES today? That's a terrible trade. Oh man. So we'll just update that. There's another one. So that's 2. Oh no, that was a 0. Sorry, my bad. Just so guys know where I've traded. $17, so could have got a little bit off that. This is now paying, but I would have, yeah. Had to weather that news storm a little bit and that bumpiness. What you can do too, if you say, well, I'm short side, I'll give myself some room. You can work underneath the set price and say on top of here I'll work it out, and you can just keep working the short side under say 17 or 16. So you say why are we trading under 16s? I'll work that short side up into 16, and I'm happy with doing that. If you can obviously see we're kind of struggling a little bit to hold bids in the 10s. We're just very soft. They couldn't bid 17 break and they folded back under, so that's not a good sign for the long side. And you mark a price, a line in the sand, and you work that offer on the limit, or you go to market into the bid and you have your line in the sand, and as long as you trade under there, you're okay, and you just take your ticks. You're not getting a lot. I mean, if you think you can get a 15.5, it's 14.5 offered at the moment, so that's 2. So you're not getting a massive amount here. It's not like yesterday. Yesterday I stretched out, but you've got a runaway market. If we didn't have that news on, I would have been a bit more happy about holding this, but news on. $15. You see they dump and then they hold. That's kind of your risk short side. And just, what's that, Timber? Took a long at 37 and got 4 points up, but reversed and got a tick waiting for a hold at 37.50. Okay, yeah, 37s are pretty decent. So that's a long out of here. You would have taken a bit of heat on that, did you? And then you got 37 and got 4 points up. Oh, you got 4 points, very good. But reversed and got a tick. Yeah, so you can see the big levels there. It's really a, if we had to look, there's a 42, which is the floor of this block of volume, and then you got 40. This 41.5 is also a bit of a level. The idea is to give yourself a little bit of room. Don't kid yourself thinking you can take 2 ticks of heat and time the market on this. If you look at 37s and you bid 37 and then it dropped out of here and you got a -2 because it went through the level, and then they pick it back up and they take it 42, that's +5. You just took 2 ticks and you could have made, 4 5s, 20. You can see how the thing is you're trying to, you have the volatility and overshoot, but you don't want to rip yourself off. Give yourself a little bit of time, and it's very important on these levels when you do is to monitor the inside here to see if there's any block hitters really trying to push this down. And if they do pick the number back up at 37, I haven't really been watching this so much, just peripheral stuff, but if they do pick 37 up, and you want these guys block hitting across there and pushing it up, then you're right. And then if you get off that mark and they start pushing it, then it could go to your next decent figure. Obviously that 40 halves also a little bit of an offered area too. You see them kind of offering in there. 40 halves, 41 halves and 42 halves. They're working at points, but they're good trades. No worries, Guido. Do you mainly trade the ES, Tim, or do you trade the treasuries? ES normally, yeah. You can see how simplified. You look at the 1 minute, you can think, what a mess. You go to the P&F, it straightens you clean out. You can see definitely bid offer. You can see exactly where they're working it. So if you track trade, you see the shoulder hold, couldn't hold it. And see that's a big dirty fail from a long. Really, they're some of the best trades that fail. If you look at this, it's the same thing. That's a long fail. That's a fail, and look at the follow through on the bigger perspective. Fails are some of the best trades you can take. It's a bit like this one. 17, break, hold. It's a fail. Longs can't hold. You get follow through. Sometimes you see that off the cash open. I think yesterday or maybe the day before. We'll have a look. Let me see. Just try and find it. But they're the best trades, a failed trade. The reason why they're the best trade, if something fails, it has to be the other side. There's only longs and shorts. If the longs can't get it done and the shorts break them, and then it's been tested that the longs couldn't do it, it's not going to go up. And once they break below the number, then everyone or the smart money will know, and then bang, they're into the other side. That's why if there was another 10 other options other than buying and selling, well, you might be very confused, but that's all we have in the markets is buying and selling. You got 50-50. So when the shorts can't hold it, the longs are in control. Fails are the best job. You can make ticks off those ones. Here's one. just for good for ticks. Offer, seller comes down, buyer break. That's a fail. A bid goes offer, hold down, ticks. And then the longs have it, the longs have it, the longs have it. Fail. So they were bidding off the back of an offer, and then they start to push it long side, and then they get broken. And then they hold this bid at 60, and then they crack it back down. It's a fail. It's not the long side. The long broke. They couldn't hold. You're marking sort of that price there, but it didn't really recover. It's in quick succession too. So it'll be like a straight after. It'll be straight after the short or the long. It won't be over a matter of time. I think it was the day before was a really good one. Let me see the cash. Yeah, this one here. So you had short, you had a shoulder hold, come back out, seller, go for the dump, buyer takes it. Next bar down, no you don't. And then the hold, that's a fail. So straight away, I mean 72 would have been great. If you guys remember that, I would have been happy to limit that, but it never got there and just dropped. It's the same with these ones. You have selling, you got to picture it. Okay, they hold what was a bid, they hold it, then offer, and then they sell it down, and then these guys take them. That's a fail, and then you get the hold on the number, and then they push it out. You're looking for someone to do something and then fail at it. They're the best trades. But it's almost a consecutive thing. You'll see the intent to do it, and then they get broken. You get a lot of that off the cash open, a lot of manipulation like this. They'll throw the market in a certain direction to get or to drag one side in, and then it's the old sugar crush back down as all the longs fail. But the shorts also get done. It's like, okay, the shorts get taken and the longs get sucked in, and then they get busted, and then we're on. Then you get the direction. But there's a gaming there. So they use the shorts to load, and they're drawing in the sucker long on the break, and then you get a fail. So you're getting both sides of the long and the short getting done, and then it sets direction. But that happens a lot off the cash open. You see a lot of that on the cash open, equities cash open. They'll just big sucker plays. What's going on here? It's pretty chewed up for me though. I don't. This is nothing. Timber, I actually like the flow of the setting though. Looks much easier to follow. Yeah, it's cleaner trade. Heaps cleaner. It's heaps cleaner to trade. I just prefer that fixed income side of things. It's very clean trade. I find equities, even it doesn't matter what equities. It would seem like the stocks are a little bit smoother, but they're just not. The Euro stocks are just, it can get messy as the ES. They're real messy trade. The fixed income's a very clean trade. Doesn't leave you any doubt what side you're supposed to be on, and the beauty of it, you can think about it. If you're very new to order flow and reading option and trying to get a grip of this whole trading experience intraday, then the treasuries or the bund or bobble, they let you think about it. You can think. With ES, he doesn't leave you any thinking space. You've got to be 2 steps ahead of him or he'll run you down. A lot of guys struggle with the speed of the market. You've got to think very quick with the ES. Bit more risk in the thing too. If you think the ES is 12.50 a tick and you're looking a little bit more than 15 in the tanners, you see how there's a lot more risk in the ES? This can overshoot levels quite easily, where this guy, he's stiff as a board. Makes it so much easier when you get a stiff market. But there's no way you can get a lean today off equities. Yesterday you could see them really smashing equities, and it makes it easier because they're just bidding the fixed income. They're both going the way they should. They're working inversely, and it's so clean. You can almost, when the ES starts to get on the offer again, you can almost count on it. They'll be into that bid, trying to push the 10s back out. And if you have the dollar lined up as well, you can kind of track it. But on a day like today, you see the ES is so washed, you can't lean on the thing to trade the 10s. You're really kind of using even the other couple, the euro and the yen. The yen's quite stiff against the dollar, but the euro's soft. So it's a little bit struggling there. But you can see in general that if you look at this 6E, see the softness, and you get softness, the euro breaking down. The yen kind of is doing a little bit better. It's a little bit firmer, the yen. It's been a pretty messy trade. But that's the ECB, the central bank. They go and shake the whole thing up. This area here yesterday, if we just have a little look at those 10s, this was a big, you see a very heavy node there, but that's where it started to trade, 9.5s. Started to trade 9.5s. You've got to block through that 4-2, and that lines up with every 4 they do. These guys, they like 4 points. Then obviously you're back to the handle. But this 10.5, as we remember yesterday, I think Ruzak was trading in and around here, took a long 10.5. That was some huge absorption on this level yesterday. Sort of running a little bit short of those 10.5s, but if you look at the stacking in the book, it'll always give you a heads up of where the money was working or is looking to work. You see these heavy limits in the 10s. There's 54, 66, and 5s all the way back to 9. There's some numbers there. But if you look at everywhere else, there's 3 2s, 3s. It's not a lot there. So if you ever want to understand some of these guys, just have a look at the limit book. I talk about skew, but that's not so much important. It's just a quick look. But as soon as I find the skew, the first thing I want to do is look why and what number they sit at. And then I see them at 10. And I remember yesterday at that level, there was huge absorption at 10. And someone's on 71.90 there today. So someone big is sitting on there either wanting to liquidate shorts or to initiate a long off 10. It doesn't really matter, but it should be in the back of your mind. But they kind of help you, because that, I remember that there yesterday because we were there. I remember that I wasn't looking at sort of crude or any other instruments, so I remember numbers and the behavior at the number, and any number that was heavily absorbed, you remember that because you just trade the one instrument day in and day out. You're seeing behavior at number, the absorption at a number, the size at the numbers. You see everything. You do get help from your chart. You can see the node here at 9 halves. So that does help if you've got a really bad memory, but if you're watching the one instrument, then you will run over sessions and you will remember stuff, and that is useful. That's why guys become specialists at, say, trading treasuries or equities or soybean. It doesn't matter. You really nail down, especially when you're intraday trading. It doesn't matter if you're swing trading off a daily chart or something like that. But if you're really coming down and playing with these guys, these makers, then it really helps just to watch the one thing. It's also an edge. That's just an edge in itself to be able to do that. All these little tiny things are edges, and when you put them together, result in sort of a positive result. Or at worst, you won't be too far off where you need to be. You might have a bad day every now and again, but if you're reasonably disciplined and you can read the market fairly well, take low risk setups, you'll be pretty close to be where you need to be to make some money. It's not always easy though. You see even today, at most I would have got a +3 out of those ones off the back 17. But think about this too, if I'm not proactive, I could have let that slide. I could be down the hole on this one. That's wrong though. That should be a red dot. That's not a. I put that as a long. I didn't long there. I shorted. But you can see how I was influenced there on the back of this, and suddenly I come over on a break 17 and it's trading under how I'm short 15 and what I'm doing. And then once it gives it up, I'm not there. This is a little bit unlucky. That was off the back of the news, but that's wrong. I should update that. Guys will probably think I bought that. That was actually a sale, not a... I just do it this way because Ninja Trader just reports terribly. It's really whacked. That's my opinion anyway. That whole... reporting of Ninja, I think they can do a little bit better than that one. Randy, sorry I couldn't make yesterday's class. How did yesterday go? And where are you in terms of ticks for the 4 days so far? I'm in the hole, Randy. On the ES was the killer. I'm down 20 for the 4 days so far for that live room, just for that time in the room. I'm down 20. But that damage was done on Monday. That's that first day. I got chewed up a little bit. I took reasonably disciplined trades trying to trade the market, but it was a pretty tough day, and it just chewed around the place for the first bit, been quite a liquid though. Yesterday with the 10s, I put some limits in, but just couldn't get anything filled. It was just a one-way market yesterday, massively risk off. And today, a couple of scratches, nothing really working for me yet, although could have been up a few and in a short now pain. Stephen, any Domri or pattern in particular that you get excited for entry or trading in general nowadays? I pretty much use oh, okay. Someone else said that, but I don't understand. So if you click the trade, I'll get to that in a second. If you go to click the trade entry from the trade list in Ninja, click the trade entry. I'll have a look at that later and see if we can have a look. It gives you the option to show. Someone else said that. Maybe it was Lloyd. And entry lines. What I was doing, I was going to data series and then going down to plot the trades on the chart and then plot the pricing. But it's like it's just a spaghetti. It's not even anything useful. There's little purple or pink triangles and blue triangles and arrows. And how could you even ever know what was going on? Anyway, I'll have a look at that. All right, no worries, Randy. There you go. Double click the trade list. Okay, cool. I'll have a look at that. Yeah, with regards, you were the question there. What I basically do in this example, say it's kind of confirming is the long side okay, and you're doing it on both in terms of the buyers and the sellers and what they're doing. So at this point up here, when I took, because this is an offered level, I then decide to go 17 bid. So 17 bid off here. That's the reason why I took the long. I was pretty cautious about it. It come down pretty quick into that level and overshot. And based upon this, I was a little bit edgy about it. And you can see what happens at just a deep correction. So and sometimes it's even hard to get out on the limit. You're best off just hitting out. As soon as it goes 16, just go bang, enough, sorry. You can see it can get away from you. But what I like to do, if to illustrate on this trade here, the first thing I kind of look at, if we're trading 17 and I'm in long here, I know the price is down here and it's irrelevant. But if we're spitballing, the things I like to see is anything that's positive from the buyer. So the positive thing from the buyer, if I grab what I'll do for you guys, it might make it easier. I'll put this in text form. If you want to save it and you say, you know what, that's a good idea, just take a screenshot. This is a video recording anyway, so I'm recording this webinar. I haven't done the last few. I just totally forgot about it. Pete said you should do the first day, but it would have been a good day to record to see what it looks like when you get your ass handed to you. But I didn't record it. But today's on things. So the first thing at 17, the first thing I would do is I'm looking at if it goes bid 16 half. Okay, is there heavy selling? That's the first thing. So when it goes 17 and the buyers show the seller 16 and a half bid, does anyone hit it hard? And you'll find that in this cell here on the inside, and you just watch it. And then if after a while it may sit there for 10, 15, 20 seconds and 26 contracts trade, and then do any buyers hit 17 hard? So if it does give it up, that's one thing I look for. The third thing is I'm looking at sizes. So what goes into the bid, what goes into the offer. Four, it's also that repetitious bouncy thing happening. So you may find it goes, say I get 17s and then they drop 17s, it goes bid 16.5, offered 17, and then the buyer goes and slams 1,000 in the offer and they pick 17s back up. And then the seller taps the 17 and the buyers drop 17s and they go 16.5 bid, and then 100 contracts trade, and then someone slugs the offer again with 1,800 and then they pick 17s back up. It's that constant popping, bouncing sort of around that number, but you're looking at the size and you're seeing if they trade any massive size under the floor, which is 16.5. You're just trying to see what's going on there. You'll know it's a key level and what everyone's focused on. It'll go like VPOP. It'll go really poppy. It'll sort of start jumping and get a bit like there's a bit of a fight on at the number. And then once you get something happening for you in a really good bullish market, it just leaves you and it's gone. You won't get tested again for a little while. You can trade it off. You can sit back in your seat and breathe a sigh of relief. Well, on the treasuries anyway. So that's kind of, yeah, that sort of pop up. So it pops up, then trades back. Pop up, then trades back. So it's that constant up, down, up, down, up, down. It's kind of skipping, you can see. And then on that popping over that number, you're seeing the sizes as it goes around or trades around those numbers. Oh, it keeps doing that. Then the next thing that I like to see, if they do hold 17 or number, it doesn't really matter. You're looking at how hard are the hits into the offer compared to what comes over into the bid. The next thing, once you get the trade started and you get 17 to bite, you want to see solid propping on moves higher. That'll be stacking. And capping on moves lower. That's also stacking. And it helps when they go and strip the other side. And once you get that, you're pretty much just trading it off. That's how you use the Jigsaw DOM. So if we just have a look at the order flow for a little bit, if we just explain what's happening, you can see they're kind of trying to pick up 13 now. If you just watch this inside, someone's on the cap here. So it's quite obvious you got guys holding down, but they've been holding this down all the way down. You see 14s. Someone's sitting on 14 and they're holding it down. They will not let that up. You can see that the floors are dropping out, so the buyer just can't hold it. It's giving you the direction to trade in. So as you move out, you see 14s are the hold. See what happens at 14. So they strip the ceiling at 14. These guys are now, they're propping underneath or they're stacking this. So you can now comparing on the way out, that 69 is quite a big number. If you look at them, it traded up and then they've shifted 13.5, 6,900 contracts to the offer. not only have they shifted, they're going to get on this side and they say, I want some more. And you can hit me here. And they sit there, and now they start to trade 14. So if you were going to sell 14s right now, I don't know if it's a good idea anymore with this. And yeah, it's very naughty this to do. You're looking at a lot of things. You see these taps, goes back up through and taps. That 12.5, they were tapping quickly, they dropped it, they went through and then picked it up, and now they tapped off 12.5. It looks like they're on their way out. And with this double stack back and a net stripped offer, and you got them crossing it over, say you got absorption 14 and they go and shift the offer, they may push it through this time. I don't know if it's a good idea based upon what I'm just seeing here, and they may pop it through a little bit. I'm not saying, but at this stage, it's what it looks like. They're starting to trade 14s, and no one wants to touch this. This 48's been sitting there for a while now, so no one's going to hit 13.5. They're not even keen on hitting that ceiling. They stripped this side. The skew's still underneath with some decent size into this 9.5, 10.5 area. They're dropping equities. You can see I'm kind of looking at this. At the same time I'm looking at this and looking at this, and then I'm looking at the dollar, and you see it's pretty thorough. But in terms of just trading, I wouldn't recommend you just sit on this DOM and just trade these numbers, because it's about location, really. That's one of the most important things. We'll just erase that. You can see now someone keeps hitting it. You watch this. You can tell it's an important number. They did the same behavior at 17. It behaved exactly the same as it's doing on this ceiling as this floor. This whole doot, 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 doot. It's like they're tense over it, like there's a change, or they're working it out, and they're in a bit of a battle, and it ticks through. But it never looked good for a sale on this time round, not with these double taps pushing through and then a tap and then pushing back through. They go and clear 6,900 at 14 and they hold, and these guys are propping. Then in terms, they're not letting it, if you compare them, they got this stripping here and they're taking it on and they're not letting it come back, and it's pushing out. You're going to have some late shorts failing, and then it could pop to 16, could do 17s. Back to settlement. You got VPOP 15s now. It's on its way up. And genuinely, you see sometimes in the ES, you say, well, they're stripped there and they're tapping here. We can go short now. I don't think so, because it's what they're also doing into a strip 14. Do they actually hit it? So these buyers show the seller 14s, but no one wants to touch 14. You will see it in a bullish move that no one will want to hit the floor. They're not stupid. They'll be looking at that intently to see who wants to sell sort of the bottom when it's moving out and it's ticking out. Nobody wants to do that. You want to sort of bid these downticks or offer these upticks into these higher prices or ceilings. You see that they're 14 and no one will touch it. 50, there's just no one trading it. No one wants to touch it. So it's not only what are they doing in size, it's what they won't trade. So you're thinking the other side. It's a bit like, if I'm buying this, why wouldn't I sell it? You're keeping a very open mind about anything. So long, short, shorts, longs, why would I be long? Why would I be short? You've got to build a case. If I'm long, what do I need to see? Well, I don't want to see sellers coming over here and slamming 14. I want to see buyers lifting the offer. I want to see propping, stacking. I want to see that dog-at-a-bone type behavior on my side of trade. I don't want to see the other side sort of taking trade from me. You can see it's ticking out from 14, off the back 14, but there were warning signs in this one. You get bid, They drop it, they push it through, you get bid, and then you push into here with some big numbers confirming that there may be something a bit dodgy about selling that lid this time around. Okay, got some questions, comments. Sorry guys, it's even done. We'll click the trade schedule. Thanks, Randy. Great. That was definitely my ass. But this is pure, I guess, if you want to scalp the market, get right down and dirty with every little blip tick and follow trade. This is exactly how you got to do it. You're really reading data and you're seeing any signs that the buyer or the seller are losing control. It's so fine what you're picking up on here. It's a little bit, it's not for everyone to do this. A lot of guys think, wow, I don't think I can get that close. I like swing trading. I like to be able to sell the ES at 42 with a stop at 46 and then just work the trade off. It's not for everybody. But you can get quite good at it if you really get a lot of sort of hours in and you see how price behaves. You see how these guys actually try and trade. You see how they do it, what their methodology is. If you look at the numbers and you look at the structure and how they're trading, you'll see their mentality towards things and what they're doing, these guys. If you trade 1,000 contracts here and you pick up 1 or 2 ticks, that can be a little bit of coin. You do that a few times a day. And you get a runner every now and again, and you can build a few, you can build trade. Like say yesterday's long trade, there'd be some guys working that long side. They might start to work the long side and they get paid and they offload a little bit on the tick back, say reload, and then they push back out, and then suddenly, lo and behold, you've gone through 25 and you've gone 20 big ones higher, and these guys just keep loading the long side. Suddenly they could be 100,000, 200,000 contracts or whatever the case may be, 20, it doesn't really matter. They could be long that and they're way at the top, and then they start trading range and they're offloading. You saw some guys yesterday icing sort of 10 and a halves, I think even 7s maybe. Someone was just smashing into them, offloading any longs on those icebergs on the bid. The skill is, or the hard thing is, sorry, is say when it goes through that 14 is actually, okay, this is what I say, as soon as it gets up to here, you have to limit straight away. If this goes 2 ticks out, you should be clicking that 14 limited and getting in straight away. You can see what happens on the tick backs. No one gets filled. It's ridiculous. This thing's trading, it's offered 16s and 187 contracts traded 14 and a halves. You can see how many contracts of these guys are getting on. They're going to market and they're shifting the offer. They're getting size on. So it can be hard trying to get the limit filled. That's why if you get the levels quick enough, you get the changeover, click straight in. You might be queued back 500 or 800 out of 4,000 or something, but it makes a difference in the end. It makes a huge difference. Okay, so how do you recognize icebergs? Basically, yeah, if you're using this, it's just a refreshing So this will keep trading, and this will just keep refreshing. You'll sometimes see it on the close if you ever watch the ES and the tenors on either the Treasury pick close or the ES at the end of the cash. You'll really see them. It's quite funny. These guys will know. You ever see it? You look around that time. You look at your DOM. You see someone start to really trade size like this, and then if anyone wants to buy it, they'll realize, oh, someone really wants to offload, and then they'll step up on the bid side and get what they want on this side. Because the whole idea is that you want a counterparty. If you're a big trader, you want counterparty. If they're offloading massive size and you kind of are happy with the number they're doing, you'll start to stiffen up your bid, and you'll see it. You'll see both. You'll see that on the ES, the cash close, and the Treasury pit, that someone will start to trade around there. They might start hitting the bid or the offer, and it'll really start to speed up, and then they'll start thickening the other side up as they get counterparty. And that's kind of, yeah, you'll see that the whole iceberg definition really exacerbated if you really want to see what it looks like. But during the day it's quite fine. You'll just see some stacking. A lot of this is fairy floss, like you see them pull. See they pull all this. They're not really. Then they pull 18, then they pull 800. It's a lot of it's fluff. It doesn't trade. If it sat there and it traded, it'd be quite thick and stiff. Something like euro dollars, when you got sort of 30, 40,000 on a bid in the ask, and it just sits there all day and does 3 ticks. But you see a lot of this is just fluffy stuff. You see that iceberg now, that as they hit it and it goes back to zero, and they just keep refreshing. But if you really want to see it, Randy, look at the end of the Treasury pit close and also the cash equities close. You'll really see it. Someone will start trading one side, and then another big guy will think, you know, there's a counterparty, I'll start thickening up my side. That way they can trade a price they're both happy with without shifting the market on themselves, ripping themselves off. Nice, 23 to 14. And this one here, Gary, if you see it's kind of, you change this now, so you're inside a bit of a, it's a little bit tough, you're inside a bit of a range now and you're almost VPOC. That's a bit of a tough trade because, yeah, you've got a range type scenario where this thing was sort of defined, it went short and then they busted impulsive long, then they broke that down, and then they went impulsive short, and then they held the short and they took it down, and then they bring it back up outside. It's generally still trading soft, but it's coming up on the upticks and they're hitting it back down. But in this situation now, VPOC, it's a little bit different because it's, if you look at the middle of the range, you're kind of there too. So VPOC is, yeah, it's a tough trade there now. This ES has got itself sorted finally. Just needed that bottom of the range to break. Look out for them. Can you move the ES DOM up a little bit? Yeah, sorry, Raymond. So if you're reading the DOM, like I said, the first thing you need to do is you need to work out the market condition. Is it safe enough to trade? This is just garbage. You can, if you're you need to be pretty quick. So, but there's also a little bit of extra risk in this chop fest. But you can get trades like Tim's. They work quite well. As long as you get your numbers and you give yourself a little bit of room. Don't be so Scrooge McDuck on the heat. Give yourself a little bit of space. But you can see we've gotten out of that. Once you get out of a chew, you really want to set yourself. So now this is not directional, this is rotational, and it's not even pattern rotation. It's just garbage. and now you're running directional trade from that break. You've got a lot of longs offloading above that 36 who are above 36. The first thing you want to do is you've got directional trade and clean break. You're trying to pick out, the first thing you look at is you're looking on this side. Any big numbers. So, and the idea is as it trades back in, you're looking at the bigger holds. You see 56, 3318 back, quite pockety. Very big hold. So you also got what was bid there around 30 halves, 30 quarters. That's a short you can take with lowest risk. But in this situation, if we were here now and we're trading back out, you have a bid price of here around that 32, but you see 8,000 hold. If you're trading back in there and you haven't done any of this yet and you're trading back out here, that's your lowest risk. It's your biggest number you can work. The further you come away from this, you're leaning on 32. That is your lean on the short side, considering you're running a direction. You see with this one, on the way back up, on this one, as it bids back out, you're looking for something very heavy on this side. You can see 5 3s, 4,000s right here at 34.75. So very heavy in and around this area. So if you're looking to trade discount from 32s right up to 34 halves, and you can grab anything up here, that is your lean. So as you trade back out into this area, you're selling into here, anticipating more downside, which you've got. And then as it comes back up, you're looking, you can offload off the lows and then reload on the ticks back on that directional move. It's pretty much the same way these guys you're doing here, but it's a little bit different. It's not so stretchy. Pushes down, ticks back, you get reloading shorts, pushes down, offload. Comes back up, reload, pushes down, offload. Because on this way down, these guys, they're kind of offloading into stops. They'll offload into these stops. They can get filled. And then you see once it takes the bottom out, it kicks back in. And then they reload and they'll push it down and they'll liquidate off the lows. And then they'll push it back out. And on the push back out, they will take it back down and offload. So they're running both ways, but there's guys fading this, but they're doing it sort of once the stops are being taken and it pushes back. Okay, let me see. See a lot of correlation here between ES and ZN. Yeah, definitely. We do have that now helping Tim. We have the ES on a break of 3.6 helping that long side in the treasuries, because it's one of the most ideal things we can have as a trader is a directional one-way market. When they go that way, you'll find if the ES is just dumping, you'll find the treasury is mainly bid. And when it's clean like that, that's what I said in this, the ES is not helping us. If you're trying to trade this and you're leaning on the ES, this is not helping at all. It's just throwing around. But as soon as it trades directionally and gets very weak, you see that this has copped a bid undercurrent. It's just mainly a soft bid all the time underneath it. So that's what you say is true. It depends. You need a directional market. It's a clean market. It's not messy and illiquid and non-directional and non-patterned. This is patterning to trade at the moment, so the ES is driving that tenors higher. You have the euro and yen too helping, so that the yen's climbed out from that 92.05 and the euro's also ticking higher. That's also helping the tenors if you're trying to get long. You're looking for anything that will help you. If you say, well, if 10s, as an example, the 10s are outside 14s, what else do I have? Okay, these are dumping. They're dumping equities and they're kind of bidding yen and euro. So flogging the dollar, yields lower, price is higher. This makes sense. I'll have a crack at out above 14 with 14 line in the sand. And as long as you can keep as close as you can to the 14, you don't you don't want to come out and buy it where they're offering it in the 10s. You want to get the tick backs as best you can, just cheeky, see if you can get a couple of ticks discount on the move out. But don't buy the tippy tops of things. Randy, if you could create a cheat sheet, how would you translate the benefit of using the yen and the euro to the ZN? Last signal for the S is short, was that hit 39s? Yeah, that was a pivot. I'll just have a look. So if the euro and the yen shifts negative, what would you expect the ZN to do? I'll bring up a chart. I mean, essentially what I'm doing, I mean, to make it easy, you can bring up the DX. If you get feed to ICE, the exchange, they offer the dollar index, and you can get a live feed. I mean, some brokers, you can even trade the dollar index. I don't recommend it because you only get 5 a tick. You're better off trading euro and yen. The euro is basically the dollar. It weights most of that basket. And if you put the yen in there, that is basically most of it. So the reason why I don't have the dollar, but I break the dollar index up and I look at euros and yens, is because I get the yen, which is basically a fear gauge. It's a bit like having the VIX. And I can tell genuinely if there's a massive risk-off situation or just a general dollar offer, as it were, or a dollar bid. It's kind of hard to. What I'll do, I'll bring those charts across in a moment. I just got to sort this out for a second. Yeah, it was pretty tough in and around here. 39. Anywhere around there, but it started to, this is a bit tough in here. There's a bit of a fight in here, and they drop 3.6. So plenty of weight trades in here, and they drop it. You see the longs trying to push out off 36, but it's a complete failure. So much weight long in there. You see just the time traded, the bulk of longs in and above that 36, and then they dump it out. It just creates all skew, order flow short side, everyone's selling, you get liquidation and initiation short side. So I'll just run across how do I do this the best way? Okay, I'll just pull the yens up. Let's have a look at this for a second. That's the yens here, and also euros. So you can see that generally the yen held at 92.05 and it's been pushing out. Weak equities, fixed income also pushing out. What you're doing is you're trying to, say you were trading the treasuries, you're trading the 10-year, that's your instrument of choice, your bit of poison, and you feel it's changing long side. So the first thing you do is you start running across to see basically what the yen and euro are doing, or the US dollar. You kind of get used to it. You'll be able to see what's happening. It's hard now to get the times, but I can almost guarantee that this and this would relate to this. I can guarantee it. So, and then you get the ES dropping 3.6 and they're pumping it lower. So let's understand this. So you think, okay, I'm going to fade this. I'm going to fade it somewhere. I'm going to work a fade. I want to buy it. It doesn't really matter what you want to do. But then you run across to the euro and you run across to the yen and you see whether that's possible. You're trying to play. You can see in that yen, that 92, it's a big level. You only have to roughly eyeball it. This is not an exact science here. But they were trading under here, sorry, and then they break it. Keeps going off the screen. They break it and they come back and they're trading it above. 92 in the yen is a big deal. You got 26.35 in the euro. That's obvious. That's a big deal. This trades into here and starts getting some legs. You get the ES dumping it down, and then you get this trying to form a bottom. You can get a cheeky long in here just by these guys. A soft equities. And the thing you say to yourself, I'm happy with this around here, long, but I need 26.35 intact, and I'd like that yen to stay above the handle. And then obviously you see the ticks. It's not so volatile as this, so this could tick down and go bump, bump, bump on a little bit of this. That's okay, but I just need these guys to hold it. You see what you're actually doing? You're trading the euro and the yen. You're not trading the tens, but you are trading the tens. But you're actually trading these because these are important to you. You want these guys to hold their levels, because if they can't hold and they start dumping and the euro goes through here, that certainly won't help a long in and around here at all. But you can get days where this is sort of dropping out and this is not doing anything. It's not going on a, that's not genuine risk off. They could just be beating the dollar as the euro and yen fall. They're beating the dollar and they're offering equities in a little bit. So you know it's not general, oh, the world's falling apart. But when you see this guy doing these ones and you see this guy, the world's falling apart, don't fade the ES. Just stick to that short side, work that right-hand side, and try and get in where they're holding it, the seller on those big numbers. Just get in where they hold it. Work down with them. The worst thing about one-way markets is they don't let you in. You've got to come up with them and deal with them. Yeah, so there's not really a cheat sheet. It's kind of, if you see, like now, you're trading up into 17, and look where the euro and the yen are. You see what's happened? You got stalling in at that 17, 16 and a half. These guys are in at an offered level. The euro's at a pivot at 6.5, and the ES is coming up higher. So if you decide, oh, I think I might get long and chase the trend, it might not be a good idea if you've got some longs in here or here. Might not be a great idea to add anything, seeing that this is trading off 6.5, the yen is back up into offer, and the ES is coming off the bottom. It might not be a good idea to add on. Maybe what I should do is wait for this to tick back, do 92.15s, euro 26.50s with the ES softening, and I can bid the bottom of this. I'm really just running around the 3, but I have the dollar index and I have the ES, which is equities, and it's helping me trade this guy. But I do the dollar through yen and euro, like I said yesterday or Monday. Maybe you missed it. Some of you guys might have got the webinar. But I do it through that. I just don't look at the dollar. I want to see if it's genuine risk on or risk off, but I'm still marking my level. But that's how you're thinking it out. You're sort of thinking, well, if this is struggling here, maybe this ticks back to here and this goes 26.50. And if this ticks up into a ceiling, maybe I can get a cheeky short along here or here and not really get long up here. It's a little bit how you would approach the whole thing, but it's a broad basing. It's not an exacting science. It's a okay, got some comments here. So if the euro and the yen shifts negative, what would you expect the ZN to do? So a little bit what you have in this, in the Treasuries, always think that's that what's ever linked to this price, you also have a yield. So as the price rises, you have the yield inversely falling. So as this rises, basically what's happening is that bond traders feel that the rates will stay low, or they're going to be low, or they'll put it off. And obviously then you have different parts of the curve. You have the front end, and it's different types of volatility for parts of the curve. So it can get quite complex, but you don't need to know all of that stuff. It's not necessary. You don't need to know about spreading and curve and interest rates and get a Bloomberg terminal and go nuts on it. You don't need to do that. But that's kind of what you're doing. So the euro and the yen shift negative. These guys shift negative, negative. That's the dollar rising, and yields, strong dollar will rise. And then you get ZN on the back of rising yields falling. But it's not all the time perfect. It's just a rough read. It's a rough read. I don't know what the percentage component is now, but the euro makes up most of it. If you put a dollar index chart up, it looks like the euro. It looks pretty close to. You throw the yen in there and you're done. Sure, pounds are in there and Swiss francs and a few others. Swedish krona, I think, in that base dollar index, the ones that most people look at. TCAT, just trade. That's it, matey. Just throw an order in there. Tim Chop, your explanation of what to watch for the dollar has been invaluable. Perhaps I should have said very cheeky. Thanks, Dale. What's that ticket? No. We haven't had too much on today with regards flow and what's that ticket? Do what your mates at Oil Tanking Group do. What's that? Just throw trades on. What's that, Pete? I record it Monday. If you want the file, send me an email and I'll send a drop. Thanks for that, Pete. Yeah, anyone just... Okay, cool. I just put my email in there, Pete. Can people contact you, Pete? Do you want your email up there? Might be easier, huh? I don't know. Or do you mean me? Some people don't like to give their email address away for those spam issues. What's that, Dale? Your explanation of 6E, 6J makes me want to send you a check. You didn't... question mark, question mark. Did you not understand, Dale, or do you want me to go over it? Or was that a joke? I don't understand. You've got question mark, question mark. So I don't know. Did you understand what I meant? Okay, thanks, Dale. Okay, Pete, no worries. I'll send you mine. Wait a second. And if anyone wants it or anyone asks for it, I'll put it on the screen. But I can bet you TCAT, that the guys at the Oil Trading Group don't teach you how to trade a DOM. They don't teach you or tell you about how stuff works. I can guarantee that much. Because you can't trade and teach at the same time. I told my old man what I was doing, and he said, "What, are you stupid?" He said, "You're going to trade live and teach and show at the same time." He said, "How are you supposed to do that?" And I said, "Yeah, I don't know, but that's what the industry expects. That's what guys really, ideally, you should really have a trade room that either educates, or you have a trade room where you turn audio and chat off and you trade and people look at you." But I don't know how useful that's going to be. It may be more useful if you decide you want to shadow trade somebody. But to do those same things, if you asked, like I said, an institution guy, "Hey, give me some tips while you trade the market," he's going to flip you the bird. He's not going to do that. He's concentrating on what he's doing. It's very naughty. He's looking at various markets. He's reading flows. He's got Bloomberg on. He's listening to news. He's analyzing, calculating, reading data, and you think he's going to teach you what's going on while he's trying to do stuff? Anyone who thinks that can be done is ridiculous, and the results show that it's very tough to do. You either trade or you teach. You don't do both. And if you think you can, open up your own website and do it yourself. You see how good it goes. Forward request to me. Okay, no worries, Pete. Yeah, I'll forward the request. So anyone that wants that Monday one, just email me using that email on the screen, and I'll forward you on to Pete. Day I was flying on getting so much quality info that I feel bad about getting it for free. No reason to be surprised. No, that's okay. I wouldn't say I'm the best, but I understand how a trade works. I just don't. I'm not, as TCAT said, multi-talented. I focus on one thing. That's what I do. And I don't charge people. So you can't complain at somebody who doesn't charge you anything. Anyone who does may have a little bit of a problem. It's free info. It's a free week. Take what you want, but you can't bag someone out for giving you the time of day to show you and then rat on the guy because he's showing you stuff and he doesn't trade a lot, or he doesn't trade very well because he's multitasking, and that's not what he does. That's not very fair to do that. So you make your own call. It doesn't worry me. I just like to help people. I just think these guys are the institutions, the dealers, the props, they're all making money. They take your money, and it's nice. It's nice for me to be able to show people, and I don't even expect people to stay in the room for very long. They pick stuff up because I wouldn't stay in a room for very long either. I just pick up some tips. Maybe a way of reading the order flow or the option that I never thought about before, and then hit the road. You're better off on your own. You're not better off in a room. Rooms aren't good. You're supposed to be concentrating on trading, not sort of getting distracted with a trade room. But once you understand the market and how it works, and get your thoughts sort of aligned with how the professionals view the market, then you're on your way. You just work at trade yourself. And that's what this is for. If you read the disclaimer at the start, most people don't read disclaimers, but that's what it says. The live trade room is for educational purposes. So if you don't quite understand what that means, then you probably shouldn't be in the room. But it's clearly stated there. I don't see anywhere it says watch Stephen trade live and make $1 million. It doesn't say that. You get what you want out of it and you go. If you know more than I do, set your own trade room up. Roy Gilbert, how does that go in your regular room? Is it a mix of teaching and trading? Yeah, it's a little bit of a mix. It's a little bit of a mix. But to tell you quite honestly, if you look at some of the guys have questions and they're talking about trades, and you've got the chat blazer chat box up, and like I said to FT, and he asked me, how does that go? And I said, well, you want my honest opinion, it doesn't go very good my end. It's not very good for me. That's the plain simple truth. And he said, yeah, I don't blame you. I get distracted too when I'm running the chat inside S5, the S5 chat. He said it sort of takes me off what I'm doing too. It's only natural that it would. It's okay to say that's, multitasking this and that, but that might be 2% of the population who can do 10 things at once. But they may not excel at what they do. They may be okay, make some money. It's not entertainment. Trader, it shouldn't be entertainment. It should be where you go to learn to view the markets, to get a little bit of help. Why are you in the room in the first place? If you're a gun trader, why do you sit in the trade room for? That's the question. Why do you go to a trade room? You go there because you might be struggling yourself, or you want to pick some stuff up. You might go to 7 trade rooms and pick up all that you need, and it might only cost you $800 or whatever the trade room costs for a month. And you're sitting there for a month, you learn option theory, you learn order flow for DOM, you learn everything, and you just spend a month in each room and you get what you want, and then you're zoning on your own in your own space. Or you could think, you know what, I'm too lazy, I'm just going to ride the back of this guy in a trade room and I don't really want to learn anything. Just going to shadow trade the guy. I don't really agree with that so much. You should go to a trade room to learn, to pick up things, and then hone in on your own. Just going through the questions, guys. Do you trade crude at all? Sid, I was going to pull some crude up just to go over it. I think, who was it? It was, I can't remember now. Someone said, William it was. William asked about crude before. So I will do it. Just going through these questions, guys. You said talking forex had a 1 minute delay. Raymond, being a subscriber now for over 4 years, this concerned me, so I contacted them, and this is the reply I got. It's delivered in real time, but there will be an inherent delay depending on your internet connection. This should only ever be a few seconds. Okay, there you go. Thanks, Raymond. Yeah, I was under the impression that talking forex was a sort of an arm of Rand Squawk. But I'll stand corrected. If there's only a delay due to internet, well, that's it. But so maybe the feeds, maybe the squawks delay, but the feed's pretty much live, so that the typed information you get might be 10 seconds late or something, or 5 seconds while they get the thing. But maybe the actual talking might be slightly delayed. But I'll stand corrected. Tim, I'm not going to make $1 million this week. No, I'm not either. John, okay, that's for you, Pete, from Rita. Randy. Yeah, dodgy. Yeah, that's true. That's true. Yeah, sometimes my wife, if I'm trading Euro, she's in the house and I've got an office of space to myself, but she might come into the office or something, and it really puts me off. I'm trying to focus on order flow and scanning the markets and reading the news flow and trying to get my head around sentiment, and then you get disruption. It just doesn't take much. Do you set aside a particular time for questions so you aren't constantly distracted? Yeah, usually just at the end. But it's just hard all round, really. Get people typing stuff. I'm in here to try and learn to tape reading better. Okay, good, Timbo. William, okay, we'll pull a crude oil up in a second. Oh, this is hot white. Okay, good. Not sure why. I hate it when my wife talks to me too. I always want to say shut up and leave me. It's not good. I don't do distractions very well. It's like T-Cat said, maybe some guys are multitaskers and they can have heavy metal in the background while they smash the dom and all the rest of it. That's just who they are, and that's fine. That's fine. It's just not me, that's all. I can't do anything about it. What I'll do, I'll pull up. I'll just pull up crude for a little bit and we'll have a look at crude. Just as a more volatile market. Got the November 14s. That's not me either. No, some people can. Some people are okay with it, and others. The reason why I ever went to trade rooms was to learn something of substance that I could add to. It's something that I believed in, that made sense to me. That's how the market works. It wasn't some guy's moving average crossover system or some system he designed. I don't want to know somebody's system. I want to know how the market works. And I was just in search for someone to sort of show me, but I couldn't find it anywhere really. I've read a lot of stuff. You read books on option theory, Stadler Mayer, and you do this and that, courses, but a lot of it's just from trial and error with me, and just sitting here session in, session out, seeing the flows come in, seeing how those flows change prices, monitoring options and what happens with results on the options and how the market reacts, and what happens when they dump equities, and what happens to the treasuries. And just sitting there for a long time watching stuff, how it works. That's just really experience. Just getting crude up. So I'll just buzz over to crude. I'll have a look at crude. It's a thinner market. Forget this on the left. That's a euro, 30-minute. So you can see the numbers are going to be slightly less for sure. That's no doubt about that. This isn't a thick market, and you can see how it trades. But you can also pick up levels like this. See 115 and 35, 89, 65, and 65 and 66. If you look at this 1 minute, you can see in here the short squeeze and then the pocket fill and the push back out. And then as it comes back down, you had it go through the level, but you see on the way back out, they kind of offer it here, and then they keep pushing it back down. So they offer that level on the way through, but this thing's pretty much been breaking down. You're using the same techniques really. You're saying line in the sand, need that to hold 5 cents, short 90, away we go. I'm working down, I'm trading down, you're looking at holds. If you're in the short side, you're looking at this. And you see that It's that crossing number. I think now market delta actually do that. It's they're not measuring the bid and the ask on the same level horizontally. They don't do that. That's not how you pick up on price pressure. You do it through the diagonal. So if prices are going up, you'll always find they'll be on the holds and they'll clear the other side. So they'll absorb and they'll clear and they'll run higher. They'll absorb and they'll clear and they'll run higher. That's how price moves. Price doesn't go back and forward this way. And you see now that market delta now has a special chart where they're running the numbers diagonally. And that's the correct way to do it. It's not a lot of it before they started measuring numbers at the side. That's not how you do it. You've got to do it. It's got to be absorption on this side, and then you come across and you clear or block hit into the offer to move it up. And then you come up and then you absorb or hold and then you clear it and then you move up. That's how price moves. But you can see that in the jigsaw DOM as it goes along. It's kind of hard to see in a thin market like crude doing it, but sometimes you see exceptional stuff like this. You see at 89.50 here. It's a pretty decent peg. So someone's held 33 and they've cleared 133 and it's kept going through 50. It's not as easy. It comes up the top of this ledge. Trade, someone comes across and takes the ledge at 60, 89.75 and sends it back down. But you can see you're back up into that level. You only have to mark those levels. And commodities are pretty good for that. They're pretty clean, like crude oil and stuff. You see these ones? Coming up and then pocket filling back, then pushing back out. They're good for scalps. But it's I find crude, it's pretty tough to trade. It glides back and forward. You have to have its location. It's like buying a property or anything else. You need the location. It's like when you trade the ES and you come across, it's the same type of deal you have. So you're looking to come up, you see a bid and you come up and they offer. And you see the bid and they come up and they offer. And you see the bid and they come up and they offer. All the time. Same in crude, you see the bids, they drop it, they come up and they offer the bid. And then they drop it. And then they drop it, then they'll come up and offer the bid. Over here, the offer, break, lots of weight, unloads, pocket fill, back to offer, goes bid. They're big levels. Just stick around them, mark your DOM, bite it. You sort of have to hit it and trade it off in crude. It's not like you can sort of read the order flow. Look at the thing, it just zips up and down. It's not for everyone. Okay, okay, Samuel's gone. Mac Sack, screen is frozen. Is it? I don't know if it's unfrozen. Is it good now? My internet's still up and running. It's okay here. Thanks, Randy. Okay, it was frozen for me. Okay, guys. So a few got the frozens. Yeah, I still got the internet. It's still, everything's running, so it's not the internet. Maybe it's just a bit glitching go to. But you're seeing crude, you could take some heat. If you look at this area here, bid and offer, you see up into here, this 82, this went to 89, so 7 cents, and now you're back to 7.6. So you can take a little bit of heat. It's like the ES. You can take some heat on the thing. Whereas if you look at the tenors, it's stiff as a board. You don't. What's heat? That's why a Treasury is a decent trade, because it's so stiff. If you can get on the right side, it just keeps rolling along. But this can sort of, it can easily burn you out by a little bit or get you a little bit worried and then sort of go your direction, which it's hard to get size on if you can't, if your line in the sand could be a bit wide. Because really what you're doing is you're playing an area where this is, you're actually playing a set price. This you could be playing a 5-tick, 10-tick or 10-cent zone. You could say from 80 all the way up, I'll give myself 10 cents and that's an area for selling. Whereas this one, it's not like, well, I'm going to go 15 and I'll give myself the 13.5. No, that's just a total change down to there. But crude, you have to give yourself some more space, and therefore the amount of contracts you trade, obviously it sort of drops a little bit too. You can get some size on in this because it's so stiff, but this, it's, you know, $10 to 15. You can sell much more risk in crude oil, and the heat you can take is a hell of a lot more than the Treasuries. That's why this is an easier trade for someone who's getting in to the markets. Okay, ECL came through fine. Okay, excellent. Higher only means nothing else in the UK. Yeah, that's true. I mean, you can see there's some type of 1-minute pin bar there on crude. You can see them throw it up and pin bar and then dump back down. But you have to refresh a lot. You'll have to hit the recycle can a lot in crude. It gets very blended. It all looks the same numbers. It's hard to see where the weight is or where they were holding. If you see the ES, you see that there's a bit of weight there at 89.7, 475, 220. It's quite subtle. But this one, look at these ones. It's kind of 5,000 sitting there holding 23 halves down. It's a little bit obvious, isn't it? It's not so obvious, and it's very blended. It's a very running type market. It's very hard to pick a level, and that's what you can get overburn on the level. Where this one is stiff as a board, you might take a couple of tick heat. The ES hasn't been the best since this summer. It's just something's changed in it. It's a little bit more volatile and slippery. But usually, even on these, if the market's just trading one way, you can lean on some of those, and this side in a short market, this side in a long market. $26s, bid goes offer. They drop 25 half, longs bail. There's a bit of buying here, 4,000. There's some loading there. The sellers drop 25. It dumps down. Then they start to hold that 24 quarter. You see them holding, and then a big hold, 23 half. Still soft. The buyer can't hold the market. There's no way. But that's, yeah, the crude's more of a slippery market. And you see on the point and figure, it's just madness. Same deal, it's just wider. Offer, they drop it, then they bid it, then they drop it, then they offer. It's the same type of thing that's happening. Bid, they drive it up, they come back down, they drive it through, and then they offer it. So to those levels, they're working. Just base levels. bid, offer, drive it, bid it. Got to give yourself some play in crude. You can't say, oh, I'm only going to take 3 cents heat. That's a joke. You're going to take more heat than that. You should be giving yourself around 10, 5 to 10 mark in crude oil. What I mean by that is if you're coming up into here, which is a decent level in crude to 35, and you're looking to make a sale in there, you hit it quick, you look at it, trade back down, and then you lock at the break even, but you don't want to sort of crest in through there too far. You've got to take your stops on crude. It can be very dangerous. There's no room for undisciplined behavior in crude oil. Absolutely. Randy, you're convincing me that thicker markets are the safer route. Spent years totally on DAX and CL. To the point it was all just too volatile to make any real sense of it. Yeah, I used to trade crude myself, so I know, and some of my most valuable lessons were taken on crude oil. And that's, do not put limitations on the market. Don't think because crude's dumped down $2, it can't go back up $2, because it can. It can go up $3 from that low. From dumping down $2, crude can do anything. That's one thing I learned. So never place a limitation on the market. Anything is possible. And the other thing is, do not ever double down unless it's part of like a swing trade you're doing and it's part of your risk profile. But it's not a good idea to add to a losing trade anyway, because feedback says you're losing. If you're short crude and you're following this down and you're short, say you're shorting in here and it starts to get up through, and then you short it again because this is coming down and it keeps going through, and then you short it again and suddenly it's trading 90-40 and you've got an average down here and half your account's missing. That's what crude can do, but that's the market. You've got to think, well, anything can happen, and I don't add to losers. The only time you should add is when you're on it. That's the market saying, hey, you're right. Your first position's in the money. You've got some space. Keep working that side. Because when you get in and you put another one on, lo and behold, you're still in the money. But what happens when you add to a loser and you add to it again at a higher price? Are you suddenly in the money? No. Now you're too deep and you're still out of the money. It doesn't make sense to do it. There's lots of arguments to say, well, the markets are random and you kind of just, it can come back down and the volatility, and it makes sense, and it's just a bad idea. It doesn't make sense. It's like, I don't know, it's like you bought a business, it's an ice cream thing, first year you're down 50K. So you think, you know what, I'm going to buy some signage, I'm going to pump some more money into this puppy. You're down 50K in a year. What are you going to pump more money in? It's a dog. Get rid of it. You're doing the same thing in trading. It's common sense. So, and that's when you get the standard retail blowout. They make a mess of their account because they're trading against the current movement and they're doubling down, adding to losers. And like I said, if you're swinging the euro and you say, you know what, I want to get short from 27 to 27.50, I'm going to break this up into micro lots. I want an average at 20, sort of 7.30, and I'm going to, or whatever the price may be, just to get an average so I can push down with the trend. That's okay if it's part of a swing risk profiling thing, because you can't quite pick and you've got an area that you think it's going to short down from. I mean, that's okay, but I mean, if you're intraday trading and you're trading your option and your order flow trading, and the market's through you and it's telling you by feedback that you're wrong, and you go and add another one when you're wrong, you should be looking to get out of your wrong one and get the right direction going, is what you should be doing. But I learned some cracking lessons on crude oil, and they're the two lessons. Expect anything can happen, and do not add to a loser. And it also taught me too that the thicker markets, yeah, they just are a little bit better for trade. You can get more weight on the thing without getting bumped, and you take less heat. This can leave you thinking, am I right? Am I going to be right? Am I right? It's one of those things. Well, in sort of The treasuries, it's like, okay, well, I'm wrong. I just get out. I don't want it here. Whereas this can sort of think, well, I'm probably okay year two, but you're still down. There's a lot of space between being right and wrong. There's too many ticks. And the DAX, yeah, that's another one. It's good just to sim the DAX. Just jump on a sim, and it's some guys love it. They just touch trade it, and they're quite good, and they like that real volatile, bumpy type trade, and that's their thing. I mean, TCAT said it. Some people can multitask and do this and that, and others can't. We're all different. No, there's no wrong answer. It's what you feel is best for yourself, what you believe in. That's the important thing. That's that really. I found a seal in the DAX. The winners can extend very well. Yeah, that's it. If you go on the right side, it can go real nice. But yeah, and when the trade goes tits up and you don't have the discipline, it can get really nasty. If you have discipline problems, trade the 10-year. If you don't get out when you should, trade something thick. If you're one of those guys that's really got a real issue with that, do not trade slippery markets like Crude or the DAX. They will hand it to you. There's just no place in those markets for a bit of whoopsie-doo. And then I start to think my tape reading is flawed. No, it's not. It's hard to read the tape. It's almost impossible. I think I'm a good reader, but get crushed with the volatility of the DAX and Crude. Yep. Willing to be in the absolute now. Yeah. You got seduced by the speed, the need for speed. Oh man. And you can see it just glides up and down this thing. It's just the way it is. But some guys love this, and like the guys in the crude oil trading room, they probably get on this. They love it. It's not everyone's cup of tea, and I can't say an argument for or against. I'm not going to push my opinion on. It's just an opinion. It's just what I think. Who cares? But I feel, and my own belief system says, a thick, stable market is easy to trade. You take less heat, and the read is better. I get a better order flow read, but that's my opinion. Guys that trade Crude, they might trade it a different way. I just looked at those tenors, been watching Crude, and if we have a look at that. I'll just go back just to finalise. It's kind of, I'm over time again, but it doesn't matter. It doesn't worry me. Monitor 3. You can see what happens here with the downside. It's just switching over. It was only subtle, but what can happen that when you're wrong, you think, well, this is coming down. It could never get out the top. Don't ever think that. It can go anywhere. You'll always keep your account, even if you're a bit of a dodgy trader and it takes a few times, but you won't blow your account in a day. You might blow it in 3 years, but you won't do it in a day. But the whole point is that you learn your lessons, you participate, and then you can build an account with your knowledge and your experience. But back of 14 gone, and then they took that a little bit of offer in and around that 17, and then they bumped them out, and it was one way. But it's a fair bit of help from the yen and the euro to do this. That's the yen. So the yen has bailed these shorters out just keeps bailing the shorts out. The yen, it's helping this higher. You got soft equities, so they're offering the dollar, they're offering equities. It's putting an undercurrent in this one, a bid undercurrent underneath it. Got some fairly big stacking here now, 43s, 64s, 52s, top side. Back to 18.5, it's going to fill a pocket. And you're thinking your mentality back, and this is what I'm saying, if they drop this and the yen 92.35, they could fill a 25.18. And then, yeah, we've got the euro. I've got crude onto that, so. But what I was saying before there about adding to a loser, as an example, say you get 14s and you're long 14s, and then they start to pay, and then you see them bidding here, so you can throw another one on, but you're throwing another one on, you're still at a level underneath the price, and you're still winning. Say you sell 14s, and then you go sell here, well then you're still out of the money. The price is higher and you're in the negative. Doesn't make sense. You've already knocked 14 off, and that's why it's so dangerous. I mean, there's guys that can't read the market properly and they're adding to losers, and then catastrophe. You see, that just never gives it up. It doesn't. It keeps trading higher bid prices. It won't barely do, and it keeps ticking out. You never get that back, so you add a short again. Now you're 3 deep here, and you still can't come back. And then it keeps going and going and going. Just don't ever do it. Makes it easier when you can track trade. You think, that's a bad idea. I'm already on top of 14. Why do I want to add some more? I'm wrong. If I need to try and get out and then try and pick up some ticks long side on top of 14 and keep going with it. And then as it goes my way, try and work out as it ticks up here, get some at 2 back or 3 back if you can get them, and just keep loading, pushing out, and then offloading, and then on the way back in reloading. But that adding, taking off will come better once you can read a market. Guys only struggle with that because they don't really understand about numbers, bids and offers and what's happening, and where the tilt and the market sort of switching over and sliding away from them. They don't kind of get that. It's a subtle pickup, but it's a lot subtler in this than, say, crude or the DAX. It's kind of subtle, that switch over. So today, scratch this. I scratched it because they kept pounding it and this was coming down. I was a little bit wary that it come back very quickly. It didn't kind of trade back into the level and tap around a bit. It was straight back in. So I was, and they were kind of back up, and there's some heavy hits on that 17 where I had it. That was my worry. Scratched it off. We had this short on the news. It was okay. You see how I didn't get the bottom. I waited till I get the upticks. Make you feel a little bit better, but we had that news on. They ticked it higher. They were holding the lid 16s. They did push it back down. It would have been a payer. Couldn't get onto that. And that was pretty much my day. So big dirty scratch. So's my life lately. Randy's put some stuff there. Ticket miners versus users. That miners, yeah. Randy, you had a great read at 14 on the ZN, but what stopped you from going long? To tell you quite honestly, I think I was talking and distracted too much. That's kind of, yeah, not really zoned in. Like I said, there's so much. You're kind of reading what's hitting into the bid and the offer. It's very intensive. So you don't really want to be sort of talking about other markets, and you need to be very much focused. He's gone though. What I'll do now, guys, I'll sign off and I'll see you all tomorrow. It was a bit tricky with the ECB up. It kind of spoiled things to start with. It made it a bit difficult with a trimmed out limit book to do anything. The ES was really a no-go until it cracked the 36. I mean, you could have made ticks there, but it's not the safest type trade to be getting in. Doesn't mean you can't make it though. No worries, sure. Tim, thanks. Thanks, Tony, William, Dale. No worries. Yeah, it's all free. I mean, you can. There's some naysayers and negative guys, but that's okay. I don't mind. It doesn't worry me. You can let it get to you, but that's their opinion. They can do what they want with it. But it's gratis. The room was free. It's when it's a normal week. There's probably a bit more trading, but it's a free week, and there's lots of questions. There's lots of guys that they want thirst for knowledge, and they bombard a little bit, and you can get drowned. And that's okay, but I just share my knowledge and I don't charge people for it. So to have a shot when you're not paid is a little bit rude, but there's some rude people on the planet, so you've got to expect stuff like that. But I appreciate all the thank yous and stuff, and I'm happy helping you guys. Take it as you will. There's some maybe that you think, oh, I know all of that, didn't help me one bit, or I picked up some good stuff on the DOM, thank you. That's really what the purpose was. Raymond, thanks Raymond. Pete, Greggy, thanks Vetus, Rita. Most of the rude people manage to find the that's true. Thanks Dale, thanks Pete, thanks Dirk. How you going, Dirk? You were in there before in the first bits. Dirk will be able to tell you I haven't really grown any wings yet. My room performance is pitiful. You're sharing some really good stuff here. Thanks, Mateus. Just got to start. Just some people looking for something that's not there. Thanks, Tim. Yeah, agree. The naysayers want to That's true, Pete. That's true. Okay. Find it a bit sad, the performance. Yeah. Yeah, because I'm doing something that shouldn't be done. Not with my personality anyway. And like I said, you get an interbank dealer or a prop trader and you start buzzing around him like a fly with questions and poking him a little bit while he's trying to do something, he's going to flip you the bird. Don't expect great results if someone's trying to show and explain and then you want them to work the market. It's a little bit unreasonable to expect that. But if I was to turn everything off, to shut the boxes down, to turn the audio off and click, 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 my performance would be better, but no one would get an ounce of material out of what I was doing. All you would say was, he went 17, why did he go 17 for? You're not going to see any analysis. You're not going to see me running across, checking the dollar, yens, euros, equities. You're not going to see me moving across, analyzing flow, trading off flow. You're not going to see any of that and you won't have a reason. It's what you want. Do you want to learn something or do you want entertainment? Some guys want entertainment, some want to learn. Well, remember I told you the very first day I'd never seen anyone trade for public, really in public and profitable. Yeah, and it's true because it's not really supposed to be done. It's not. You don't do that. You either trade or you teach. And like I said, if I was to run the room and turn everything off, it'd turn into a shadow trading room where you think, oh, okay, he's working the market, it goes pretty good, but I don't know why he's doing anything. And then the natural inclination is what people want to do is go, hey, why did you do this? Why did you do that? And then suddenly you get roped into answering the questions. So you can either educate or you can trade. Doing two at the same time, even those prop houses, they have guys in-house that are that they're teachers. they teach the students, but they're not trading live. They actually go into a room and they sit down and they teach the guys. They're not working the market, and then you've got other guys who are in the room in front of the screens working the market, but they're not. There's no people around them asking questions and buzzing around them, and that's not how it works. It doesn't work like that in the real world. But a lot of people think it can be done. They have this airy-fairy, fluffy opinion that it's the way it happens or you can do it. But the reason, Dirk, you can't is because of that fact. You're trying to do a lot of things at once. I miss flows all the time just because I'm explaining something or answering a question, or I've looked at Chat Blazer. Then the Rand Squawk, there's a headline come on Rand Squawk and I'm 2 minutes late on the news or the flow. And that's what happens to me. And it happens to me regularly. So it's very frustrating to do that, but I do it to sort of help people. I don't. I'd much rather work on my own space, but no one's going to benefit from it. But that's it. No, you're dead right. I struggle. I know, what's his name? No Bullshit Trading, John Grady. I think he struggles a little bit on his webinars because he's trying to show and teach and people are interacting with him, and you feel sorry for people that have to do it. But I mean, I don't. For the fee, what does he charge to read the DOM? I don't know. There's some guys around, they charge thousands to read order flow. You can sit in here for a month for $200, and you look at the DOM and you can read the DOM. I'll show you how to read the Jigsaw DOM, and it's $200. You can see I'm not trying to get rich from this. I'm trying to help people. Pete and I just want to give the Jigsaw guys a leg up, and it's just the way I look at the market. But I do use those base things: option theory, volume, profiling, the structure, order flow. I'm flows. Yeah, it's a very rounded approach, but it's not easy to do live, real time, and then do it all on. I've been with John. He was also not profitable. John does a good job, as you guys do. Yeah, and I wouldn't be surprised if he's slightly down or scratching off for the week. I'm not surprised at all, because he is running a teaching thing, and that's what this is designed for. It says in the disclaimer it's educational purposes. It's not. This is a shadow trading room, and Stephen's not showing you anything. It's not how it works. But I do put some money where my mouth is. And some days are better than others, I'll be brutally honest. Some days are good for trading and other days are good for just having a tap here and there to see if you can get something. Some days you get very good edges and other days you just don't get anything. And it's just the way it is. No worries, Randy, you're gone. Thanks for taking the time to explain something how it isn't. It's really bye for now. He has a class coming up. Okay, thanks, Raymond. Yeah, he does them often. But he's a good guy. He means well, and he has a business. But I'm not surprised some people with these live trading, trying to live trade and show at the same time with live money. It takes balls to do that in front of somebody. You put your neck out like that. It's not, and you do it to help people. But what usually happens is you cop a grilling all over the internet doing it. And like I said, I do it for peanuts. It's not like I charge people $1,000 a week to come into the room or something. I do it for next to nothing, so it's kind of a hard medicine, or it's a hard pill to take. But I'm trying to even the score. These guys, these dealers and these institutions, they take too much money from people, and I just think the retail should deserve a little bit, especially if you want to work hard and you're genuine. Then it's nice to be able to at least maybe a few tidbits. Like I said, there might be some things, some guys may say I didn't learn anything, and other guys may, wow, I learned more in that free week than what I've read on the internet in terms of order flow and trying to blend option theory and do the whole lot in one. So I'm pretty chuffed, and there might be other guys that think, well, what a loser trader and whatever else. So that's fine. John does one next week. Oh, there you go. Do props cooperate together, reader? Yeah, collusion I think it does happen from time to time. It may even be some of those bigger guys, they collude a little bit if they have a bigger positions to offset, and they may try and come to a deal. That's when you see out of exchange block trades and stuff go through. They may try and work stuff out, I don't know, just to save disruption in the markets. But I wouldn't be surprised if, say there's a barrier in the euro and the trend's down, and there's a knockout barrier at, say, 125.50, and the euro's trading soft on the back of ECB, looking to do something, and there's a few institutions, I don't know, maybe they collude to drive it to the barrier to knock the stops out. They may do it on their own steam. But they won't tell you. They won't tell you what they're doing. I know the silver market was manipulated years ago. There's probably markets that are manipulated. They manipulate the interbank, the fixings, those FX guys. There's plenty of manipulation and games in the market just to try and make some money. So it's not all fair sometimes. And moving the market like Libor, yeah, exactly. When they fudge those Libors and all the rest of it, or they fudge those fixings and all the rest of it. Anyway, guys, I'll sign off now. Yeah, I apologise for the. A lot of guys want to see trading, but I do trade and I explain what I'm doing. I'm not sort of being. And some days, like I make a conscious decision not to trade maybe the ES. Like I get a market like this up here, and I don't have to trade that. I'm not here for entertainment. I'm a professional trader, and I make the call. If I don't want to trade spaghetti, and I wait till the market, that's my call. So you can't hit anyone for that. But it's, yeah, a lot of guys want to see a lot more interaction, and that's fine. Some guys think you can do 400 round turns on the ZN in a session, and that's fine. If they think that can be done, well, good. But it's not how I trade. I'm not going to change my MO because I run a room. And to tell you quite honestly, sometimes I've had that pressure to change my MO because I'm running a trade room. There's that pressure to trade when maybe the market's not good, or you don't have a clean enough edge. You get pressured to trade just because you're running a room. There's lots of bad things that happen psychologically from doing this. It's not very nice. If Pete asked me again, would I do it? No, I wouldn't do it. I just wouldn't do it. I love helping guys out, but I just wouldn't. It's too much arse on the line. Thanks, Bob. I did record some part of the previous few days, Miss Early Morning. If you want these, okay, very good. And how you read the market info, you did exactly the right things. Thanks, Pete. And I know there was a guy from New Zealand, Alan. He's a really nice guy, and he said he was shocked. What it taught him was patience, to wait for the right type of market. And he said that he learned a lot just from me not doing anything. He thought he maybe had this perception that as a day trader, you got to go click, 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 click all day. But he said what it taught me, the room, is that, hey, I shouldn't be doing that. I should be waiting for edge. I should be patient. I should be stalking the prey and then hitting it when I have an edge. And he learned that from it, which was quite surprising, that it was the lack of doing anything he appreciated. And I think I'm a bit with you, Pete, too, that it's, if I go to a room, I kind of want to know. I'm not so so into watching the guy trade 100 lots and doing this. I just want to know why he's doing it. Why do you do that for? Why not short it now? Why are you suddenly going long? Why? That's more important to me, because it's, yeah, why do you get out now? Why do you scratch that trade at 17? Why don't you stay in it? Why aren't you going 17 to 24? That is valuable information, and that's how you handle trade a little bit. put me on that stalking list too. Yeah, exactly. And like I said, I'm happy to learn from somebody else too. Lloyd sent me some stuff on Renko, and I'm just an advocate of always learning, having an open mind. This is one way to look at the market, and I'm always searching and thinking about trade in a holistic, pure manner. There's no right answer. There's some of you guys could have had a great week this week and made 50 ticks, and I'm sort of down 20, and that can happen. And you hit the week pretty good. You might be comfortable with market condition where it's not my week. Yeah, it's just the way it is. Amen. So thanks, guys. What I'll do, I'll sign off now. I'll stop the recording. So we got the recording.